Hello guys, right, today we're going to be going through a super simple strategy which you can pretty much use on any instrument on any time frame. In regards to what time frame you'd use this on, I'd base it depending on sort of your availability with looking at the charts. If you work full time and you find that you can't always look at the charts, can't always do the analysis, then some form of day trading won't be too ideal for you. So I'll be looking at doing that on an intraday basis. So with this one, we're going to be looking at the GBP USD today and an opportunity that I've seen with this strategy at the moment. This one's looking quite good. So it's all based on market structure basically, and sort of following the trend. Where the long-term trend is, this will be a sort of intraday type trade. I imagine this will probably keep on for 2 weeks most. But with this one, what we're first looking for is we have these 3 simple moving averages. Now these are just to simply find out what the trend is. I mean, you can pretty much see, we are in a downtrend, but having these simple moving averages here, that pretty much confirms that this is in a downtrend, because up here, this blue one for me, this is the 960 simple moving average. This yellow one is the 320, and this red one is the 60 simple moving average. So with this one, it is basically as it's as basic as just seeing this sort of layout. So where you have the bigger simple moving average on top, the medium moving average in the middle, and the lesser moving average at the bottom. And obviously, to find a bullish trend, you'd be looking at that the other way round as well. So we'd have the red on top, the yellow in the middle still, and the blue at the bottom for the uptrend. So on the 4-hour time frame, this confirms for us that this is in a downtrend. And for this strategy, you only want to be trading with the trend. It will give you the best probability. You've got to remember that trading is a game of probabilities. Like any analysis you make, it won't always 100% be right. Chasing perfection in the markets is not an ideal way to look to trade, because you're never going to find it. Anything can happen. Any bit of fundamental news can come out, whether that's economic or social news. Anything can happen at any time. You should always expect the unexpected with trading. Trade your strategy, trade your rules, only take a trade in the setup when you see it, and don't diverge from that, and you'll find that you'll be fine. So I'm just going to take these off now, because that's just for identifying the trend. And with this, we're going to be looking at market structure. So if we move over to a higher time frame, so we are trading the 4-hour time frame, but we're just going to move over to this one here. So we see obviously that we are in a downtrend, and we can see with yesterday that in terms of market structure, we've basically sort of got this level of support right here on this just this sort of little area there, where yesterday what we can see is that the price has tried to break that and break out of that range and closed below this. So that's positive confirmation. This is kind of what you want to see on the higher time frame from the one that you're trading in order to take this. And you also want to look out for a pullback towards the high of, well, in this case, because we're selling the high, if you're buying it would be the low. So in this case, we want to see that pullback just to a nice area where we can get our trade in. So we've seen that now, that's all good. And then on the 15-minute time frame, what we're seeing is basically this price here. I mean, we're sort of in this range here, as you can see. We've got this higher high up here, and then suddenly we're breaking, but this is a lower high from here, of course, but then we're getting a lower high. And even though, yeah, we did break that again, it's this range here that I'm predominantly looking at. So this sort of area where we've attempted that again and closed back in. So and given on the daily time frame as well that we've come up to the high of that, this is a comfortable trade to sort of be taken now, in my opinion. So what we're looking at, if we go back to our 4-hour time frame and just get rid of that real quick. Lovely. So as I said, what we are seeing with this range is we're seeing these lower lows, higher highs oh, and then a higher low and a higher high, and we're seeing that sort of range there where we're coming down and then up and then down and up. So now we're getting to a point, as you can see with the price action that we're seeing here, where we're sort of consolidating, and I'm not too sure that this will push up any further. Traders can wait for that initial push up to then see the rejection off for a better entry. That's entirely feasible if you wanted to go for that. And I also know that if we go onto the higher time frame and draw out some support and resistance levels, so on the monthly, I can see that here we're trading within a range which we've come down and hit last week. So with that, we are near the end of the month as well, and very well this could close up a little bit stronger, and we'll see that. But 9 times out of 10 what you'll see is the price will pull back to this level down here and at least retest it. For this to actually shoot off after the first attempt is quite rare. As I said, it's a game of probabilities, and the probability is that it will come down to retest. It's a higher probability of that than for it to shoot right up. As you can see previously here, we know we've had those retests, and naturally we are in a big downtrend anyway. So if anything, the retest is way more likely as we are trading with the trend. It's only sort of hit that area once, so it more than likely will retest. And also what could happen is after this day and a half has finished, what we can see is this come down to close the month bearish, and it might even break lower than this range and try and attempt a new low before rejecting back in. So that's always a possibility too. So if we hop back over to this one and we go down to the lower time frames, we're starting to see this now, this consolidation, this build up where this is going to be breaking one way or another, and obviously our prediction would be to the downside. So with this trade, what we're looking to take is, or what we have taken, sorry, is just this here. So again, we just want this above this range here, and if we hop back over to the daily, we're just looking to make sure that we have our stop loss above this area, because if it breaks and closes above this area, then chances are it's more than likely going to head up a little bit more before coming down for that monthly retest. This month could close a little bit higher, and then it could even push a bit higher before then coming down. So that's the area for our stop loss. That's when we want to get out of the trade and say, okay, that one's over now, we're done. So with that, we're going to be hopping back over to the monthly time frame, and as I said, what we're looking for is sort of this area here. So what we want to see is sort of points of interest with this. So I mean, here I would say would be valid, and I think for a first take profit that would be a good place to have, but that wouldn't be where I want to get out the trade fully. So I'd say here would be a good point to come down for the retest. It's just above this doji that we see here. Doji is a type of candlestick and sometimes can indicate a reversal to retail traders, and other for institutional traders. That's like sort of liquidity. That's a point at which they see, and it would need to be attacked again. And in this case, you've seen this here. It's come down and taken all this liquidity, taken out everyone's stop losses, and shot back up. But that's for another lesson, that is. So I wouldn't worry about that one. But just because we do have a couple of points here of support, this is where our second take profit would be, for example, and then probably our last one would be sort of just near the low of this monthly candlestick. And as is always important with trading anyway, once you've taken your profit, setting your stop loss to break even is a good part of this strategy. It ensures that defense is your best offense in this game, so having to make sure that you're not losing money, as well as taking profits at different points, is always the best idea and always the best thing to do. Alright, so with that one we've got that set up, and that would be a valid trade. So again, this market structure that we're looking in summary, we've seen the attempt go to break it, and now we're looking for that rejection downwards, because we've had that attempt there, it's failed it, and it would take considerable buying at this volume in order to break that, and we'd need to close above the daily. Of course, that could be exactly what happens. I mean, if you look at the weeklies, I mean, we've got two fairly bullish, strong weeklies there. But as I said to you, we're also looking for the retest of this area because we've only hit that the once there. Other than that, once this does hit, as I did say, we'd be keeping on the trade just in case it was to move that potential further. But then down here, we'd be looking for potential buy setups and seeing how that one works out for us. So it's a nice little strategy there. Like I said, you're just using these simple moving averages of the 60, the 320 and the 960 to find out on what time frame you're trading, the direction that the trend is going in. So we know that one, we're in a downtrend. We're near the top of the range of this consolidation. Price can and maybe will break that, and you can attempt to trade a rejection off that. Taking the trade early is not always the most sensible idea unless you've got the confirmation that that's happening. This is a good area nonetheless to get into this trade. As always as well, risk management is your most important thing in trading. As I said, anything can happen and you do have to expect the unexpected, so making sure that you're not over leveraging and not trading more than your account can bear. For newer sort of investors, I'd probably say sort of 1 to 3%, maybe 0.5 to 3%, 3% being the max that you go for of your account balance to risk is sensible. If you're a little bit more experienced, then you can do 5%. This would basically mean that you have to lose 20 trades in a row in order to empty your account, which is not really common for anyone. Drawdown periods do happen. Me myself, I think the last drawdown I can remember that was sort of bad. Well, I think I had about 7 trades in a row that lost. So it doesn't always happen, and your risk reward for this trade, is pretty good. It's a 13 to 1. So if you were to win this trade, for example, the next 12 trades of setups that you take like this, you'd have to lose in order to make up for just this one win. So the risk reward is always good. You are trading with the trend. You've waited for that opportunity. You've waited for the retest to come back up. The setup looks good, and it's promising. So if it fails, of course it fails. But you've done everything to ensure that this will be a good trade, whether it fails or not.